All right, hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and this is our options trade of the week. We will indeed work on over to our trade of the week in just a moment, but I want to circle back and talk about a Tesla trade from a few weeks ago. For those of you that have been following us here on our YouTube channel, we talked about this scenario a few weeks back, talking through how to manage a losing position, and we used Tesla as the example. We talked about how at the time we had a short call spread on. This was back on March 31st. On this move to the upside, this extreme move higher, we were looking for price to start stalling out, potentially pulling back to the downside. And we ended up selling, let me get my exact strikes here. We sold the 1,055, 1,060 call spread, right? And initially it just flat out did not work. And back on the 31st, we talked through how to handle that position. We use this as an example of how to manage or how to handle a losing trade, because ultimately they are going to happen. It's part of trading, right? The key is keeping those losses as small as possible. And then as options traders, knowing when to potentially give it another shot to see if the move ends up playing out in our direction. And it's called rolling the position. And we talked back on the 31st how our outlook hadn't changed, right? Tesla went from overbought to even more overbought, and we ended up rolling the position farther out in time. What that meant was closing out of the existing position. The original position, we ended up taking a loss. All right, we ended up closing it out for $3.05. It gave us about a $130 loss per spread, right? No way around it. Just Tesla flat out did not want to work in our favor in a timely way. So we rolled the position out, and by rolling, what we did is we opened up a new position farther out in time. I went out a couple weeks, sold another call spread, and let me show it to you right now. I'll go over to the trade page. We ended up rolling the position to this one right here. It was the April 14, 1120, 1125 call spread. All that meant was I was selling the 1,120 call and buying the 1,125 call at the same time. It was still a neutral to bearish position. I was still anticipating Tesla moving lower. I just gave myself more time for the move to play out. So the first position that we took ended up taking a loss. Again, $130 loss per spread. This new position, the one that you're looking at up on the screen, we opened that one back on March 31st, and we collected $2 per spread. $200 per spread was what I was collecting, and we were risking $300 per spread. The goal there was to both battle back from the original loss and hopefully potentially take a little bit of profit. Now you can see this spread is essentially worthless. For those of you that are newer to credit spreads, that's a good thing. The goal is to sell the spread to open with the goal of buying it back cheaper to close, and we pocket the difference, right? So we ended up closing out of this position. We ended up closing it out last week. Just wasn't able to get the video out. I apologize for those of you following our channel. I just wasn't able to get the video out, but it was closed out. We closed it out for 50 cents. It gave us $150 of profit per spread. When you factor in the $130 loss that I took on the original Tesla trade, it gave me a $20 profit overall. Now, you look at that and you say, 20 bucks. You just sat there and tied up capital for a few weeks, and you only booked $20 on the overall position. Here's why that's a major victory. We are going to have losing trades, right? I was flat out wrong on the original trade. I ended up taking the loss. Well, that did a couple things for me. And number one, I kept the loss small. I rolled the position trying to battle back. I didn't just throw in the towel and say, I'm not going to take anything else on Tesla. We'll just take the loss and move on to another name. I said, no, my outlook hasn't changed. I went ahead and put on a new position further out in time. And now instead of taking that loss and just moving on to another product, I battled back. As traders, we have to learn that sometimes those small profits are the biggest victories, right? Because now I'm able to battle back. I'm staying disciplined to my system. Had I held, sure, I would have been able to book even more profit. So if you're still sitting on this position, if you're subscribed to our channel, you saw my earlier video, you can close it out now for 5 cents and take an even bigger profit, which is great. We just want to make sure that this trade is closed out. Now, I did have a question come in. If my outlook hadn't changed, why wouldn't I just hold the first position? The one that ended up taking off for a loss, why not just hold it and see if Tesla pulled back? Well, we are just flat out running out of time. The move was not happening quick enough. Clearly, we can see that Tesla did end up pulling back. It's down another $47 here today. So our outlook was correct, but our timing was not, right? So instead of just hoping, right, and trading off of, just hoping that the move happens in our direction, we have to use smart money management, and we have to use a disciplined rule set. So by rolling the position, taken the partial profit. Now I'm completely flat on Tesla. I'm going to stay flat. We've got earnings upcoming. So I'm going to stay flat on Tesla, not going to do anything new. And if you have any questions on this whole sequence, I use Tesla as the example, but you can follow the same procedure, whether it's in a financial stock, an energy stock, an ETF. It doesn't matter. When you have a losing trade, as I walked through in the earlier video, doesn't necessarily mean you just have to close it out, take a loss, and not do anything else. There are definitely times that rolling the position, as long as your outlook for that stock has not changed, rolling the position can help you battle back very quickly. In some cases, like this one, take a partial profit. Other cases, I may end up just taking a partial loss on the overall position. So we were fortunate here. Tesla ended up working out in our favor, and we are now done with that whole sequence. So as always, if you have any questions on this sequence, on the last couple of trades on Tesla, feel free to post a comment here on the video in YouTube, or you can contact me directly. Mike@netpicks.com is my email address. So now let's move on over to our new options trade of the week. And let's take a look. Let's go back over to the chart here. And I'm going to move the chart from Tesla to Lulu. This is Lululemon, symbol LULU. This is the 130-minute chart. I'm still looking at a lot of credit spreads, guys. I'm not opposed to buying calls and puts, but in this market, we just had a lot of back and forth, a lot of choppy conditions. We've had a lot of headline risk in this market, the continued uncertainty with the Russia-Ukraine situation, all of the inflation headlines, the Fed raising rates. The market is a little on edge, right? A lot of nervousness being priced into this market. So I'm not necessarily interested in just buying directional trades, looking for the big moves up and down. I have definitely been in more of a defensive stance, looking to be more conservative until this market gives a little bit more clarity as to where the next big move is going to come. So on Lulu, we're looking at an overbought condition. And how do I quantify that? If I take a look at our histogram down at the bottom, it's what we call our pulse histogram. You can see that it's been blue, green, and yellow. What's of most interest to me are the green and the blue bars on the pulse, because when I start to see blue bars, it indicates price is past a 3 standard deviation move. The green bars indicate that price is between a 2 and a 3 standard deviation move. So we can clearly see that price is very, very overbought. When I start to see right now, currently at the time of this video, we're sitting at a 1 standard deviation move. What does that mean? It means that only 13.6% of all occurrences will fall outside of this range on the upside. It does not mean that price can't move higher. It just means it's not statistically probable. In all likelihood, when you start to see a whole series of yellow, green, and blue bars stack up like this, it'll typically lead to a period of consolidation or a reversal in the other direction. Lo and behold, what's happened here? Over the past week or so, prices started to chop sideways. It's building energy for the next move. It's the coiled spring pattern. We don't know when it's going to break out of this pattern, but we know that when it does, it's probably going to provide a pretty nice tradable move. It's of our opinion that that breakout's going to come to the downside. Because the latest move was to the upside, we got way overbought. We're expecting further downside pressure. Now, if I'm expecting a bearish outlook, the first thing I could do is come in and buy a long put. The problem, as I just mentioned, is if I buy a long put, I need a lot to go right in my favor. I need the stock to move to the downside, and I would need it to do so very quickly. What if I don't want to be that aggressive? What if I want to be more conservative with my outlook? How else could I put on a bearish position? Let's jump over to the trade page and let's talk through it. So if I jump over to the trade page, let me delete the Tesla position out of there so it's not distracting. If we take a look at the Lulu trade page, we're going to go out to the April 29 weekly options. This is this cycle right here with 18 days left. I'm going to go ahead and open those up, and we're going to go to the call options on the left-hand side. We're going to take a look at selling an out-of-the-money call spread to put on a neutral to bearish trade. So I'm going to go out to the 385 call, this one right here. I'm going to right-click on the 385 call, go to sell, and go to vertical. That's going to pop up an order down at the bottom where by default, I'm selling the 385 call, and we're going to take a look at buying the 390 call at the same time. I'm showing it to you here inside of Thinkorswim. I'll pull up Tastyworks in just a moment and show it to you over there as well. But if I can go ahead and get filled, let's go ahead and lock in the price. I know price is kind of bouncing around in here, but let's talk about getting filled at $1.50. If I can get filled at $1.50 here, if I click on confirm and send, what ideally I would want to have happen is for Lulu to stay below the strike price of the option that I'm selling. It's that 385 call that I'm selling. As long as price stays below 385, I'm okay. If the stock moves up, down, or sideways, it doesn't matter to me. I can make money in all 3 directional moves. as long as price stays below 385. The current stock price is at 369. I could have a $15 move to the upside and I'd still be okay. The only move that hurts me is that big move higher. So up, down, or sideways, all three directional moves are okay. I also make money from time decay adding up. So every day that passes, that helps me. And I could potentially make money if volatility decreases. Instead of having one way of making money by buying a long put, I give myself 5 routes to follow to make money with the credit spread. And now there's trade-offs. All right, I give myself 5 ways of making money, which will provide a higher probability of success long-term. But it also means I'm giving up my home run profit potential. My max profit here is whatever I collect to put the spread on. In this case, $1.50. I would be risking $350 per spread. So I'm risking between 2 and 3 to make 1. That's fully acceptable for me. I can make that range work. If I start to risk 4, 5, 6 to make 1, it's way more difficult. I want to stay in that risk 2 or 3 to make 1 scenario. All right. So another thing to point out here is if I were to take a look at buying a long put in Lulu, take a look at these options that are slightly out of the money. You're still talking about $1,200 per contract to buy the 365 put. And that's expensive, right? It's tying up a lot of capital. If you've got a smaller account, now I'm able to put the spread on. We're not talking $1,200, we're talking about $350. Much more reasonable for a wide range of account sizes, okay? Now, if we get filled at $1.50, I'm looking to buy the spread back for 75 cents. That would allow me to keep 50% of the max profit. That's the goal on the trade. Why wouldn't I hold it to try to make the full profit? Because in this market where we've had so many head fakes and so many back and forth moves, I want to get out of this trade as soon as possible. Okay, the closer we get to expiration, the gamma risk increases. And for those of you that are new to options, it basically tells us that the closer to expiration that we get, the options become more sensitive to changes in stock price. Okay, if I can avoid trading during expiration week, that's ideal. Okay, that way I'm not positive for the first 15 days of the trade. It does exactly what I want it to do. And then we get a reversal in the last 3 days and I go from a profit to a loss. I'd rather take the profit when I can get it, hopefully at 50% of max profit, free up the capital and move on to the next trade, just like we did here on Tesla earlier. Okay. So again, the ideal scenario on Lulu, we make money the fastest if the stock moves lower. If it doesn't, if we just chop sideways or even if we drift slightly higher, I can still work with that. Again, as long as price stays below 385. But if that's the case, if we don't get a move lower, I'm just gonna have to hold longer and wait for more time decay to add up in my favor. Okay. Let me pull up Tastyworks here real quick and we'll take a look at how to place the trade over in the Tastyworks platform. All right. So here we are over in the Tastyworks platform. I'm going to the trade page here on the left-hand side of the platform. I'm typing in Lulu and I'm going to the April 29 weekly options. Going to open those up. I am going to left click on the bid price of the 385 call. Once I do that, it's going to box it in red, indicating a sell order. I'm selling to open that option. I'm also going to come down and I want to go ahead and buy the 390 call at the same time. Once I click on the ask price of the 390 call, it gets boxed in green. That creates a spread order down at the bottom. I'm trading 2 options at the same time. You can see that I'm selling one of the 385 calls and I'm buying one of the 390 calls. I can always change my quantity here. I can just click on the left and right arrows. So you can definitely change the position size depending on what your account size is. The mid price on this spread is $1.52. So I'm just going to go ahead and I'm going to change the price to $1.50. Let's see if we can get filled. I'm going to go ahead and click on review and send. So now my order is working. And like I showed in one of the earlier videos, if I go over to the activity tab, you can see that my Lulu order is working here. I have the order placed at $1.50. It's currently trading at $1.47. So I'm going to need one little push to the upside in the stock price in order for me to get filled at $1.50. Now, with a credit spread, I want to be picky on price. I don't want to just chase. If I can't get filled at $1.50, I'm not willing to adjust it down to $1.40 or $1.30. If I need to adjust it by a few pennies, that's one thing, okay? But I'm not going to get super aggressive here just for the sake of getting a trade on. With a credit spread, I want to get filled at a good price or not at all. Okay, so I'm going to keep my order working at $1.50 here. We've got about 11 minutes before the market closes here at the time of this video. So I'm going to keep my order working at $1.50 just to see if we get any type of a rally here in the last few minutes. I want one more rally to get filled on the trade. And then as soon as I'm in the trade, then I'm looking for the stock to move to the downside. So we'll continue to track Lulu here, see if we can get filled at $1.50. I'll continue to track this trade. I'll jump back on here next week. We'll see if we can close out of the position and potentially take a profit. So if you have any questions on this specific Lulu trade, feel free to email me, again, mike@netpicks.com, or post a comment here on the YouTube video. If you're not a subscriber, please subscribe to the channel. That way you're notified anytime that we post upcoming videos. And if you have any topics, guys, on the options side of things, if you have any topics that you would like me to cover or review in upcoming videos, let us know. Post a comment on the video, and we'll certainly take a look at any additional topics that you have questions on. So I'm going to wrap this video up here. I'll be back with you guys here next week for our next options trade of the week. We'll talk to you then.